Hey, good afternoon, guys. It is Friday, 1:25. The market's just closed. Let's just jump right into it and look at the charts to see where we ended. So this is November 24 soybeans. The reason we're looking at the 24 contracts already is that with the volatility we have and the setup we have, we want to make sure we manage that risk quickly and efficiently as prices come under pressure. So you can see that we've been working this big, long ascending triangle. Now, typically on a big triangle like this, the breakout is in the direction of the slope. So typically you would see this breakout higher. But here you've got a triple top, and it doesn't always end well like that. You know, it's like a 55% probability, probably. So we want to be cognizant of the fact that we can roll over here and head lower. And if when we look at the old crop contracts, the January beans, you'll see that they look even weaker than this. But for the most part, no real change here. Held the hedge line, failed to break out to new highs, and failed to break out the top side, but also didn't do any damage to the downside either. So kind of a neutral week for soybean for the new crop contracts, even though it's two-sided. Now for January, you can see that we have a little bit more bearish slant to it because it didn't hold our hedge line. And in fact, on the weekly chart here, I'll show you that in a second, it looks really bad. But we had the breakout here Monday, Tuesday, Wednesday, Thursday, Friday. Here's Monday, Tuesday, we closed out and above. This looked really, really good for higher. Then we had the reversal on Wednesday with follow through Thursday and today. So that's a bearish setup right there. When you fail to hold the upward trend lines here, this was kind of a big failure. So we hate to see that happen 2 days in a row and close below our hedge line. Now, it's not unsalvageable from a bull argument here, but we need to hold this hedge line for sure, and we for sure need to stay up above the $13 mark or these lows. Otherwise, beans could be in real trouble. Let me show you the weekly chart here so you can see what this looks like on the weekly chart. This is the weekly chart of January beans, and you can see this big spike up followed by the big spike lower. It's a bearish engulfing week. It almost got an outside week right before the close, but really nothing good on that bar to speak of with the failure up in these levels here. We really need to see beans get up and out of here in order to preserve kind of what the bullish argument would be there. And what's driving it? Well, it was dryness in Brazil, followed by in a little bit of demand, right? The dryness pushed China. They started buying because they maybe perceived a little bit of risk. And then the weather forecast started to flip, and it became wetter out into the critical time period for Brazil. Definitely not out of the woods. This could turn right around on next week and go up and out of here. But you got to take it a day at a time, and you can't really guess what's going to happen moving forward. Okay, so March corn contracts, really nothing just to write home about. Kind of a volatile week. We have an outside day up on Monday, a big double close key reversal. We have a reversal on Wednesday, a reversal on Thursday, and another reversal on Friday. So 4 out of 5 days this week, the corn market had reversal bars. Super unusual. Something is coming in this market that's going to take it outside of this range. There's a lot of indecision and a lot of people probably trapped on the wrong side here. So a move lower shouldn't be ignored, and a breakout up above, this area right in here also should not be ignored for any of these corn contracts. Let's look at DEES24. And DEES24, like beans, remember what beans look like, right? I'll snap back to it. Here's the ascending triangle. Here's your flat top up here. So, right, you're looking for an upward breakout or a lower downward breakout. Look at December corn. Both of your 24 contracts are in these big wedges. Now this one is just a wedge. The other one's an ascending triangle. We closed right on the bottom side of it. And what we don't want to see is acceleration down to the downside. So the risk here is growing for December 24 crops to get weaker in price based on, who knows what. Certainly you can make arguments to the bearish side, and I don't want anybody thinking that you can't. You can make arguments bullish that, hey, we're going to burn up South America, demand's going to come in, and we got to go higher. That's certainly a bullish argument. Inflation could be a bullish argument. All those things are true, but for them to manifest, you got to get above this junk right through here. You've got to get above it and hold it in order to go higher. Otherwise, the risk is lower. And what would be the catalyst? Well, a bailed out South American crop and a balance sheet here in the U.S. that looks burdensome moving forward if we don't cut some corn acres. So corn's got to give up something to someone else, or else we're going to overwhelm the balance sheet with a 3+ billion bushel carryout absent a weather scare. So the market's not going to price that in all the way, but it also is going to cap rallies until something moves itself out of here. So the risk is real in 24. The risk is real in March because it's kind of the same. It's actually on the weak side, right? All this support right here failed to hold after we closed above it on Monday, right? Here's Monday. We got back up above it. Great sign. Even yesterday, we bounced off the 61.8 retracement, came right back up above it and closed. That's a great sign. And now today, boom, we closed back down below it, which is really negative. So this low here really needs to hold next week, or corn could be in trouble. Now wheat, don't have anything rosy to say about wheat. Just continues its debacle. Had another down day today. We do have a 13. We have a triple and quadruple divergence here. The down move continues to lose pressure and selling exuberance. There is a weakening tenor to this downtrend. It's been the case for weeks. It feels like a broken record. But when these things snap, it's gonna be powerful. Keep saying it. The question is just from when. So, and the answer is not this week, not today. Wheat is down yet again. I see no reason to be on the sell side of this. I've been doing this a long time, and I've seen this setup repeat itself over and over and over, and it gets you to a point where you want to capitulate and you want to sell it. And when you're done doing that, that's when it just absolutely rips your face off and just bounces back higher. So for us, this is actually a signal right here where we want to re-own some of our bushels that we've already sold. This 13 is a signal to re-own on a 25% long piece. So if you sold 100,000 bushels, you'd want to buy 20 contracts with a delta up into the higher range. So let's jump out to July 24 and look at what could be done here, right? We didn't quite get the signal on 24 wheat. We got another day here to go, but let's just pull up an options train and let you look at what this is. Okay, so a July 24 call, trade closed at 680. A July 24 call is only 35 cents in at the money with a delta of 53. I think that's light. I don't think that's an accurate quote. But the delta is 54. To get a 25% delta, you have to go out to about $8, which would be much, much less expensive and would put you in a position where you can capture some of the upward move. So you would buy calls out here on your bushels, and if prices do snap, they would pay off very handsomely. It's not a huge spec because you're not taking a whole bunch of additional risk. That would just be on sold bushels. So if you want to talk about that, please call us and let us know. It's not a signal to say, hey, go long at the money options or get too crazy. It's an out of the money signal first. If we get back up above this hedge line and back up above this stuff, then you probably want to drop those down and get a little bit more aggressive because that's a more confirmed signal. But for now, it would be a buy and out of the money call setup in order to capture some of a move back higher. But you know, if you take a small bet here and we do rip higher, it's going to pay off really nicely, and you'll wish you owned lower, but you'll be glad you're so far out of the money if it keeps leaking lower anyway. Okay, that's what we got for you today. Lots of volatility, lots of two-sided stuff going on. Remember, there is always risk trading futures and options, and you should only do so in light of your own financial condition. We will be back with you on Monday. We'll be with you Monday and Wednesday. We'll see how it goes, whether we kick out a video Wednesday or not, but we'll communicate with you and tell you what to expect. And then we won't do anything on Friday. Have a great weekend. We'll talk to you next week.